Hello friend, I am Kaustubh Biswas. I am an investment professional. Sensex is all-time high. Lot of my friend, colleague, customers, they are asking me one question: whether there would be major crash in the market, what to do in this particular scenario, when Sensex would be double, when Sensex will touch 1 lakh, when Nifty will touch 20,000 mark. Let's do one top-down analysis and try to identify the answer. As per study, in the year 2050, world human population would be 9.2 billion. Out of that, 6.5 billion will stay in urban area. It would be urban population. World's economy by then could be more than double by 2050. As a result, 6 out of 7 largest economy, they will come as a emerging economy, led by China, then India. 4th position would be Indonesia. Now if we come to India, 5 states of India like Tamil Nadu, Karnataka, Maharashtra, Punjab, Gujarat, there more than 50% population would be urbanized. Number of metropolitan cities would also be increased. Like in the year 2011, number of metropolitan cities was 46. In the year 2030, it would be 68 approximately. It is expected that Indian working population means age 15 to 64, will grow 1.2 times during 2015 to 2030. By 2030, India will shift from agriculture-based economy to service-centric economy, where 58% contribution will come from service, 38% around come from industry, and 8% will come from agriculture. In this direction, we should mention in his Independence Day speech, our Prime Minister Sri Narendra Modi ji in the year 2019, where he has mentioned in next 5 years there would be 100 lakh crore investment in infrastructure. In his Vision 2025, he mentioned 1. Affordable clean energy, 2nd. Digital service to all, 3rd. Quality education, 4th. Convenient and affordable transport and logistics, 5th. Housing and water supply to all, 6th. Disaster resilience standard compliance public infrastructure, 7th. Doubling farmers income, 8th. Good health and well-being. Till now I have given idea world and India planning to move into which direction. Indian economy got V-shaped recovery. It is double from the pandemic low. We can see wildest stock market rally in the history. After 6-month consolidation, we can see Nifty has fresh long. It has crossed 70,000 mark, and we can see fastest 1,000 point rally ever in Indian history. Reliance, the leader of the bull market, give fresh breakout after long time, and after that FMCG also joined the party. Central banks continuously support to the global growth. RBI and Fed, they are focusing on reviving the economy. So that is why it seems that they are not very much concerned about what the speculation is going on in the stock market. The upswing will be fairly broad-based from all the sector. Tech and finance with the largest weightage in the index. The world's major economy like US, China, Europe, they continue to engage in currency printing and deficit spending. Government across the world increase their infrastructure spending to boost their economic activity and the damage which has happened for the pandemic. So some sector which will get benefited: 1. Metal, because of infrastructure push. 2nd. Textile and chemical sector, because world is looking alternative to China. 3rd. Maybe telecom, because 5 years moratorium has been given for AGR dues by government. Next, production linked incentive scheme. PLI scheme will give benefit to auto and auto component mid and small size manufacturing companies. Some of the contract manufacturing companies also get benefited out of this PLI scheme. So in my view, there could be 10-15% correction in the market, or there may not be any correction in next 3 years in the market. Maybe underlying correction already happened. So we need to understand companies earning already increased. In my understanding, Sensex should be double by 2028 around. Nifty will touch 20k by end of this year. Now the question is, what should you do? First thing first, you should contact to your investment advisor and take advice from him how to invest. Next, so in your overall portfolio, you should have proper diversification. In your along with Indian equity, you should have some bit of global equity, some bit of maybe gold, some bit of debt, maybe some bit of real estate. Okay, so your investment advisor will guide you based on your risk profile, risk appetite, your goals and cash flow, etc. Next is if you are investing into direct equity. So this is the time you need to invest into only fundamentally strong companies. Now don't be panic, because you need to understand index is not equal to your portfolio. There might be small correlation, but until and unless you are investing into index fund or ETF, there are very small correlation with your overall portfolio. So if you invested into a business which has free cash flow year on year basis, which is growing, which has profit year on year basis, which has growth, which has more into their businesses, etc., some other fundamentally strong parameters, so you don't need to worry. If some fall happen also, it will recover very fast. Next is, in this time you should enter into the market through SIP or STP route. Next, very important thing, don't sell 100% equity. If you want to participate in this rally, you need to be invested. So if small fall happen also, don't come out 100% from equity. This point of time you have to be systematic, be strategic. Remember, no one can time the market. Thank you. If you like this video, please like, please subscribe to my channel. If you need any kind of help regarding investment, you can WhatsApp me. Me and my team will be happy to reach out to you.